Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of March 26th. Crazy week, lots of things going on, lots of news affecting the market. We're going to start off by taking a look at the overall market. We call this the market radar. This is a chart that I post, and I've been trying to keep up to date. Just a kind of a macro, big, large scale chart of important levels to watch and where we might head from this. You know, some good directional bias to be brought out on this chart. We actually had this level here, 2787 area. That recent high up here, we wanted to see if we closed above that. If we closed above that, then there was a good shot that we could actually get to all-time highs again. As you can see, we got through it, but we did not close above it at that point. We started putting in this a trend line. We can even adjust this trend line down a little, but either way, I think that this trend line, because we didn't cross the our breakout line here, there was a better chance of falling back into the pattern here. So we're going to fast forward this and actually take a look at what's going on with the market over the last 5-6 days. And you can see we did finally break down. And now there's some news out there. There's still the trade news out there, the trade war news. There's sanctions being placed. There's a lot of things going on that's kind of put a little pressure on the market. There's issues with Facebook, tech. Market seems to be a little squirrely right now. So right now we pulled back into this pattern, and again we have this level below us, this 2534 level, that is coming into range again. So a lot of people will be watching that going forward. The market here definitely unstable. As I speak right now, we've actually been seeing some selling. Let me see if we could go out and take a look at the chart today. We opened up after yesterday's big sell-off. We were down like 700 points. We opened up and we consolidated for the first couple hours, and then you could just feel the market was kind of weak. We had just kind of a pennant formation, and we broke down out of it. We broke down through that VWAP, which is so important to watch. And once we broke down, we had a little flush here. And at this point right now, we actually have a nice divergence. There's a nice little divergence bounce going on right here. Now, I'm strictly doing research today. I'm not doing much trading at all. We're going to go over a lot of stocks, but we also have to be very cautious. The market here is in a downward, bias, and we do have the momentum to the downside. Last week we did catch a lot of stuff on it. I was actually hesitant and short the market last week. We had some puts. I had puts in Facebook, and I had puts in the SPY, and they worked out great. But the longs that I've been holding have been just being dragged down with the market. So we're going to discuss those, and we're going to discuss what to do to protect yourself in a further push down in the market. The news is going to be actually an issue, because the news is definitely driving this market. And but those divergences, that is the key trading opportunity for us. I mean, every divergence I took this week worked out. Every divergence I could show you, I could even go back here and say, 9 o'clock to 9:15, it was a nice little divergence here. Very obvious divergence, and look at that nice move off of that. All these are going to make us money, and that's what we have to concentrate on. We have to concentrate on the short-term trading setups, not worry about the big picture as much, unless you're really, taking some big swings and stuff along longer-term trades. But the short-term trades, that's great. We have no issues with those. I have no issues with taking them. I love to continue to point out these divergences, and make everyone money with them. So get on board with the divergence trade. I mean, it's very, very important. I have a lot of videos on it. Don't forget to check the forum. On top of your dashboard, there's a forum, and there's a thing called the DayTraderRockStar Playbook. Go to the playbook. The first couple videos up on the top are based on these divergence setups. Also do a whole course on divergence, my ultimate divergence course. It's everything you want to know and learn about divergences. It can be found on theschoolofstock.com. And that is my best. All the knowledge is all compiled into one big course there, broken down to lessons. Excellent course to get us up, get you up to speed on this if you don't follow along during the day when we do take these and you want to learn how to identify them and how to trade them yourself. Definitely go to that resource and check that out. Because that's where you're going to make your money. I mean, we are going to make most of our money in the short-term time frames. The longer-term time frames, sometimes they're not going to be working out as fast. But that's that's part of the gig there. So let's go back here.
Sorry, I couldn't find what I was looking for.
Sorry, Alexa.
No problem.
So here's another look at the chart, and you can see I have a lot of lines in this chart. Don't pay attention to this. It's just my, short-term setups. Sometimes they, on the 60-minute time frame, we're looking for the downward channel pop off of a lower trend line. We did, and we broke back down, and this is where we are now. But I want to break it down for you a little bit better. Here's your 5-minute time frame. Actually, that trend line, which broke out, held, kind of pushed back up, it came down to that level and held it. Just looking at today, it was a nice bounce zone right now that just happened around 12 o'clock. All right, so let's get started on, let's actually go back to the market radar section here, because that is, I want to show you where we could end up going here. Now, the one great thing about this, pulling back here, we have an interest. We have the 200-period moving average underneath us. We're just about there. If we make this live, I think we can actually see some of the signals here start to show up a little bit better. All right, so here we have all the indicators lined up, meaning our divergence, our stochastics here are rotating nicely. The 200-period moving average, you can see it's right underneath us. It's going to bring us down to about 25.98. That's the 200-period moving average. Definitely want to pay attention to that zone. Big zone. Someone actually put a new line there. I find that to be a big, big zone. We came down, closed above it. But this is interesting. This is something you don't see that often in this environment, because the last, how many years we've been really in a very bullish the market has been very, very strong. So we've been really, not really seeing too much of an oversold level. And when we do get those oversold levels, the market tends to bounce pretty aggressively. So this is the first time, or actually not the first time, but right now we're oversold on the daily. Now, I'm going to go back to my other charts because I like using those. And let me adjust this so we have a clear view of this. All right, just remember, we were just talking about divergences, how important they play in our, our short-term trading techniques. And this was a perfect 12 o'clock divergence. It was a perfect textbook divergence where our first level was at low. Our second level was a lower low with a higher low on the stochastic oscillator on the 14 and the 9.3. Pretty good one, and a big reaction off of that. And right now putting in a little bottom. Not to say that this is going to last. Definitely not. But that's the setups we go, and that's our money maker. So, no matter how you're doing in the markets, if you have the patience to wait for these setups and follow us in them, you're going to do pretty good. Totally different from stock trading. The options or the futures traders could be done with the ETFs, and you could do it with options on the index, spy calls, and spy puts. Any way you want to handle the move, but the move is going to be there. So going back to that chart, and this is a cleaned up chart of the S&P. So this is what we're looking at. Big pattern, 200-period moving average underneath us, the lower trend line. But what I want to point out now is the two big things that I'm paying attention to. This is we are oversold on the daily. We got back underneath that. Like I said, every time we get back down to that zone, we tend to have a nice bounce. Now, if I want to zoom out here a little, you're going to see two marks here. These were two divergences in the market back here. And not to zoom in, but these were after a little pullback. Very slight pullback. You got a divergence and a nice move up. Here you had a quick little drop and a divergence that showed up. And then a nice little rally. Now, we haven't gotten a divergence or anything like that, but we are getting oversold. which plays a big part on that, and also on the 60-minute time frame. 60-minute time frame is also oversold, so we call this a multiple time frame setup. It's just a multiple time frame. The 60-minute, the daily, both lined up here, which is very bullish for me. I love watching this 60-minute start to rotate back up. Again, overhanging this news. Overhanging this market is news. There's definitely news, tariff news, maybe even a veto of the funding bill. We're talking about that going into a weekend. So anything can happen with the news that could break down technicals. So that's the wild card, and that's why we have to be very cautious going into the next early part of next week, just in case there is news out here that kind of pushes this market lower. On its own technical look at things, yeah, I would like to see this start to rotate back up. I'd like to see this candle that's developing right now off of that divergence be a nice low in the market and start to see something off of it. I don't put a lot of confidence behind that. We'll see how it turns out at the end of the day. I'll show it to you because I'll be working on these watch lists all day. And so we'll get to that later in the day. But definitely more cautious going into this this next week based off of news. News is dangerous. All right, so let's go over current conditions right now. 5-minute on the S&P. I just had a couple questions in the room on Under Armour. I'm going to get to that. But the 5-minute S&P chart here just gave us a textbook divergence. The higher low, the lower low, double bottom, but a very nice divergence here. This is typically a fantastic long-term setup, long-term versus the 1-minute time frame. You can see the channel has been down a lot here. But these divergences tend to break these major trends, whatever trend we're in, whatever channel we're in. We're kind of probably going to break out of that. We're right up against it. I would say there's a good shot with this divergence. We break out of this. Now, you can approach this different ways. Again, I'm behind the scenes today trading and just doing this because I got have a lot of other things that I've been working on. And this is a really good setup. I just posted in the room that this looks like a pretty decent long right now. The question came up on Under Armour before. We're going to start off with a few stocks this week because we're still very nervous about the overhanging news in the market. And I just mentioned to one of the members that if China comes out with some type of countermeasures for our tariffs, retaliates against our tariffs, that could drag this whole market down, and there's been talk of that. There's also been talk of Donald Trump vetoing this spending bill because it's not no funding in there for the wall. And now I'm hearing talk that he is going to sign it, so that might actually pop the market up here too. But that's the type of day we're going to have, and that's probably what we're going to have going into next week, a lot of this news. And there's other stuff out there. I mean, there's just so much out there right now that could affect this market. But technically speaking, Under Armour has got to be one of my favorites at this point. This was a gap up. We took this trade into earnings and we sold it, and then it's pulled back and we got back into it. I'm in it at 1424. Yeah, 1424. And it's been chopping around here. It's nothing really going on. It's in this consolidation right around that level. And I would add to it on a break of 1425, actually. That would probably confirm our thing. And Nike just came out also. And so Nike came out, and if you take a look at the Nike chart, NKE, you'll notice that it hung in there. It gapped up, slowly moving back down. So, wanted to see how the Under Armour would react into the earnings. And you can see early it gapped up, pulled back, and now it's consolidated. So this is really a kind of a very bullish chart right now versus the overall markets, versus everything. Very nice setup. I like it going long. It is an HPS setup. I'm going to be one of my best bets going into next week with a buy, or I'm going to add to it on a break of 14 and a quarter on this one. So we'll start off with that one. And again, there's not going to be that many setups this week because of the setup. I don't know how many divergences I'm going to be showing you. I have a lot of research that I'm still working on. And there's some good setups that haven't set up yet. So let's start talking about that. So right now we'll start off with an Under Armour. Looks great here. You can wait for that 1425 to be broken. Or you could just, just take it as it is, relative strength. Just get it in down here. This looks pretty good. One of the excellent scans I like to do in this type of market environment is looking for relative strength. If you have a view that the market, yes, the market is going to go higher, but we have to pull back in these times, and when there is uncertainty in the market, it does put some pressure on it. But also, there will be some good stocks that kind of float to the top of the screen. And I have a nice scan that kind of gives me these flags that are holding above the 20-period moving average with a rotation back into an oversold level. And these are called our 2020 trade setup. And I have some pretty good setups here, and I'm going to discuss them. Again, I'm going to bring them out because I think you got to write them down, put them on your list, and actually, maybe even possibly trade in them if you want to stick with the quality names where money flow is going. Even when the market's selling off, these are really holding up the best. So here, Wynn Resorts actually, take a look at that one, the daily. After it got hit, it's actually rallied back up and now pulled back to the 20 after all that issues with Steve Wynn. There was a beautiful divergence back here that really pointed out that big pop. And this is where it is now. So that's holding the 20-period moving average, looking pretty good. But take a look at some of these. Some of these I don't trade. ResMed, gapped up, pulled back, trying to hold, but it's just getting oversold, holding the 20-50 period moving average. Edward Life Sciences, very strong, a classic 2020 type of trade. Moving higher, pull back with all the weakness in the market. Actually, Dow going positive here, back in positive territory. S&P's down 8. But as you can see, this is just holding that 20-period moving average. We're oversold. Extreme strength in these stocks. So write these down. These are also, they're pretty good trades, too, if you actually get a breakout. So when you have a downward channel like this, it's easy enough to, tighten up the setup here. I go to that 60-minute time frame, put a little trend line in here just to get a feel for it. But you usually tend to look for those higher highs or higher candlesticks on the daily chart. And that's good, too, because that's on the hourly. It's just getting oversold, too. So this is really a nice-looking chart. Just looking for a pop out of this consolidation and a little further push higher. It looks excellent. And, again, that would be kind of confirm a break above that 140.33 level. 144.33 level. That would give us a pop through the recent candle high, but this would probably turn this back over and give us, just a nice move back up. So EW, very nice looking stock, $138, looking good. Tapestry, I think this used to be Coach. Go figure. Anyway, great looking chart. It's not down oversold to the 20 line yet, but it's definitely holding that 20-period moving average and showing some of the better strength in the market. And Booking.com, the old price line, same thing. This has been an extremely strong stock. $2,000, $2,119. But it is acting and falling into the 2020 criteria.
ES Tradeometer overbought. NQ Tradeometer overbought.
So now we're getting a little pop here in the markets. Red Hat, same thing. Linux software. And
Sorry, I'm not sure.
Oh God, please. Again, same situation. Take that previous high candle, not today's candle. You could actually use today's candle going forward, but I would use the high of 155.10. Maybe even a little bit higher, to kind of thing. But again, once you start to get that cross back up and the momentum here driving this back up, these are going to be the first ones that kind of rally. All right. The UHS here, Universal Health Services, same thing, holding the 20-period moving average. Intel, we talked about it all week, very strong, old school stock. Holding the 20-period moving average, very strong. And then we have Autodesk, again, gapped up, pulled back. And now we have holding the 20 period moving average. So these are the type of stocks that I like to cover, at least partially cover on these watch lists as a flag or a very strong setup here. Now we go back to that SPX, the S&P 500 5-minute time frame, and you can see that divergence here working out with a pop, and now we got an aggressive move through this trend line, and here we go. This was really a textbook 5-minute setup, and that's what we preach here. That's what I preach. You gotta take these divergences. These are your go. This is your holy grail. This is your best bets. If you have the patience to trade and you want to trade, these are your. This is sitting at the poker table and getting dealt. Getting dealt a great hand where you can double down. It's just what you want to take. That's what if I could just do this and trade these setups, I would. And I tried it to do. That's why I am always cautious and patient on my setups, especially with the futures. I only take the futures. I only take these type of setups. Let's take a look at the HPS setup here on Joe, which is a coffee ETF. It had a really good setup. I put it on the watch list last week. I got into it and just discuss this setup because today it actually, when we talk about breakouts and technical levels that we want to see trigger, the truth is we want to have a closing price above those levels or a closing price below those levels, meaning if we have a buy trigger, we want to close above those levels. In this case, we kind of triggered that, pulled back, and stayed underneath it. Same thing on the downside. We actually triggered the buy trigger, which activated this. Then we actually kind of pulled back here with the market, and then we actually kind of gapped down, triggered that, and then moved back up. Really, this is still active because we haven't really had a close back above the a close under the stop. And even if we did close under that stop, this pattern is actually still a valid pattern. It's just a very tight setup. I only put a 50-cent kind of a stop on that versus the entry and the exit. So I'm still in this. I still think that the channel is valid, but the setup here is a little bit more difficult because of the way it trades around. It gaps up and gaps down. So I want to kind of just point that out. I want to continue to just say that this is still an active wedge pattern divergence. It hasn't really crossed back under the 20 line. It is down at the lower trend line down of the wedge pattern, and we really need to have a breakout of the or close above that line to be kind of what's the word I'm looking for? Anyway, just watching some other things here. So we want to have a closing price above that buy trigger, and once that does, then we really consider this an active trade. I still like it to the upside. There's not many times we get in this. It's usually on a divergence, and we usually do get a little pops on it. So we'll see how this continues to play out. So updated on this. I want to continue to keep this active until we have a breakdown or a close underneath that stop. Or, and again, the same thing. We'll close above that stop. We're going to activate it. All right. So let's go on here. IAC, Interactive Corp, always one of my favorites. That's another very strong stock holding that 20-period moving average and the 2020 setup. One of the best out there. We've been trading this one. Currently not in it, but I actually like the pullback here. Like the pullback on this. Typically, the HPS type of criteria that we look for, either that oversold level and a trend line. We're not quite oversold here, but as you can see, we don't have to be oversold. We just have to pull back to the 20, and then we turn back up aggressively. So we actually have a bounce today, even though the market is choppy and a little down. But we're about to go positive on the S&P. Lockheed Martin, aerospace defense here, seems to be leading. And I've been really, seeing strength in those. This is a beautiful pattern on Boeing. It did gap down yesterday. It is popping back up on Boeing. And Lockheed Martin LMT, same thing here. Big pop today on this one. Big pop. Wow, look at that. 342. Huge pop. And I was trading this one back here too. Boy, today would have actually put everything back into You know, this is a huge candle today, huge candle. One thing I did yesterday, and I want to talk about, is I got into these Google calls looking for a rally, and that was not usually my my type of trade to give me only a day to get this rally, and I'm kind of upset about my setup here because it cost me about $800, and
Hi, took alert.
I'm not going to do that again. It's just not my type of trade usually. We did see a level over here. I wanted to see where were we on this? I wanted to see this rally, but the market really just sold off and dragged everything down. And I like the trend line here. It's just not enough time for this. So just to kind of show you what, you know, the big picture on Google, love the oversold level, love the dual time frame oversold level. The daily 60-minute time frame is also oversold. We're on this little lower trend line too. You can hear my voice today. It's really scratchy. I just, but you know, extend this out. I do expect this to pop here, but the options probably weren't the best way of going by this. I think the common shares would probably be better, or options further out, which is going to lead, you know, definitely a more higher priced premium on those options. So that was a, you know, I think I made an error on my behalf of getting into something so short notice. There was so much volatility in the market. I was looking for a home run on this one yesterday, and we just didn't get the bounce. Now today, hourly, we're starting to get a bounce now, but these are already, you know, degraded. I mean, we need a massive rally going into the close to really bring this back up. So I'm going to take a loss on this, and I'm not happy about that. So I'm not going to be pushing that type of trade anymore. It's more of a, you know, organized trade on my side, where we could scale in and be very, you know, disciplined about our entries and add into it and cost average and stuff like this. This was a go for broke type of trade, and it's moving now, but it's not going to move fast enough. Well, I've just seen a divergence in the tradeometer here, so I am thinking of taking the trade here, if we could get this up on the screen here fast. Let me see if I can get this thing. I'm only going to take one contract on this.
Order filled.
Alright, I'm in. See if I could actually show that. Stop is going to be pretty tight. Uh-oh. Actually, it's going to break down. We did get a little divergence. See if we can actually hold on here. We'll give myself a little run on, a little, right here. Yeah, we go. So there's divergence here. Alright, come on, let's do this. All right, let's see here. What
My apprehension of it is the you know what I mean, because they're so close to lows. Hell, even this little thing right here, you can call this kind of like a
little divergence here. I know I'm talking to Paul in the air. I want to take this probably off. It is a lot of selling in this market.
Order filled.
So take what we could get on that. There's a possibility of a little further pop, but let's move on. I'm in the process of doing a watch list, and we'll come back to that. So we did take a little off of there. You can see that divergence worked out pretty good, but up to the 20-period moving average. And I just mentioned in the room, in a type of market like this where you feel the downside bias, you have to understand that, sometimes you're going to get great setups. You're going to get, in this environment right now, the volatility and the range bound is much bigger. You get 10-point moves where we used to get 2-point moves. So, but on the downside, when the market is pressure into the downside and you get a divergence, instead of looking for that 10-point move, look for that 2-point move, maybe a 1-point move, and take what the market gives you. But you have to take the setup. I mean, this is a harder divergence to recognize, but it was a tradeometer signal also. So, I know Paul got 2 points on that. I just jumped in and jumped out here. But this, the potential of this moving even higher is much better any other time. And if we bring over the tradeometer signal here, you can actually see it's just been on. It's a tradeometer. It's just killed it today. It's just the only time we actually had a little issues where we the market went into a sell. We actually broke down here. I don't know if it was news or anything, but once we got back into that rhythm, you could see things are just playing out perfect. And that's just your, that's your edge right here. The edge. You have the edge. But also understanding the other points of the chart here is where you have to take that edge and get out and not become someone who hopes for a move. Just take what the market gives you, get out, wait for the next setup, take what the market gives you, get out, just like that, and you're going to do fine. All right. Another setup here is the Verifone. We sold off, kind of broke down, took out the lows, and now really ramping back up. So this is a really great reversal candle that's going in here. At 12 o'clock we sold off. We continue to grind up here, and I'm bringing over. You can actually see some good action on this. This is actually really interesting to point out because of the strong trend, even though the market is pushing a little bit lower here. This seems to have a bottoming process being put in. A big reversal candle today. I'm long. This is one of my favorite stocks of the year as a possible takeout candidate. I am. It's a swing trade. It's a position trade, and it's kind of a higher risk trade because it's looking for any type of news on this. It's just a gamble. But this candlestick here, I have to point out the candlestick in the rally here. This actually would be a good setup with a candlestick low for an HPS setup. If you understand where I'm going at with that one. So again, take a look at the setup here. That's the 5-minute. The hourly just starting to curl back up. We took out those lows, and then the daily, again, you can see we took out some lows here. And this candle starting to build as the daily starts to get oversold. This is typically an HPS setup. It's a cheaper stock. It's right on the lows, but it definitely put in a reversal right now. We just talked about there's another divergence. I'm just talking about the Verifone. And I like the Verifone here a lot. Already long Verifone. But I love this candlestick. I would put a stop underneath the candle at 1580, 1570, whatever. But right now we're also looking at a possible divergence on the ES here. Gonna hold in at 20. It's not a super textbook one because we dropped into the 20 there. We like to see that. But watch it. No position right now. Actually, I'm going to add the HPS. I want to add Verifone to the HPS site here. And I'm also going to just kind of mark this down and see how it works. We're coming up on 240. As we get closer to the close and this market here continues to kind of grind down, we're looking at better odds of closing at the lows. Especially in this environment, the potential of news coming out over the weekend on all kinds of things will probably keep a lot of people a little spooked. Unless there's news here and some kind of rumor out there that something might happen, then we could see the market there bounce. But right now, the only thing we have going for us is a divergence setup right now, and I would be very, see if we could actually take a trade on this. Really, it's a tough one. I want to watch it here closer. It's not a perfect divergence. I like to see that 14-3 divergence play out. Let's see here. Do we want to take that with a tight stop at 28? I want to pass on it, but I have a feeling we're going to pop here. But I want to show you how well those divergences are. Now I want to chase it now, right? Johnny, what are you doing, buddy? I want to let it go. Let it go. Let it go, Johnny. It's over. That trade is over, Johnny.
It's over, Johnny. It's over!
Nothing is over! Nothing! You just don't turn it off!
That's right. We're going long! No. Mark it down. This is going to probably end up being a nice pop here. All right, market here continue to sell off. We're at the lows of the session, but look at the cash chart. We're coming into the last half hour of the trade, and again, the market here still selling off, and that's what we have to really be concerned about. Let's take a look here at the 200 period moving average. This is the 200 period moving average, just probably tagging it here to the penny, to the tick. Oversold again. Halfway into this pattern, we have our lows down here, our February lows. A lot of people are looking for that to test. I'm not 100% on board on that trade to test, but we're very close to it. I think sometimes when things are looking so obvious, they tend to trick everyone and go the opposite way. I think that 200 has a shot here. We do have some news out on Sunday night, 60-minute interview with Stormy Daniels. So again, who knows how that's going to play out for the president, and if that does, I don't think it's going to have much of an effect. But always have to understand there's things out there all over the place. There are landmines for this market. The tariffs and the Chinese issues, some other things that are weighing down this market. We have to clear those up, but the scalps are still there. That's where we have to concentrate going forward. The market is definitely pulling back and affecting most of the ships here that are sailing on these seas, and if the tide's going out, it's dragging down all these stocks too. So we have to be super cautious going into Monday. Super cautious going into Monday. Do we get a bounce here, double bottom bounce? One thing I will point out here, well, you're not really seeing it. I'm not going to point it out because I'm not confirming it. I thought I was seeing a 60-period divergence here, which is something it's a rare event, and when we do see that, that's usually a good event. I love the 60-minute divergence. It's very close. It almost looks like something's setting up there. But you can tell the market here having a hard time getting any upside. Very easy to get the downside. Every little upside here is being pulled back. But there is an opportunity here, 2602. I always like the 02 level instead of the whole number. I always like the, that 02 level. So I did take a little shot here on the SPY calls here. Just a gamble, $150 stop, basically 5 contracts, and here we go.
High tick alert.
And we got a high tick alert. High tickle me Elmo alert. Oh, 9. See what we could do with this here. Again, those calls are 261 calls. 261s. So we're flat on them right now. We really need a huge rally here.
NQ tradometer oversold.
Huge end of the day rally. Just to get those things. That's kind of a Hail Mary into the close here, seeing if we do get any aggressive bounces. But I do like the short-term scalping here. Paul did a great job today covering the
low tick alert.
Cover the market and scalping. He had one of his best weeks trading divergences. He's probably up like $4,000, which is amazing on the futures trading. So we want to concentrate on that going forward. Don't want to, and even if you're not up to date on it, it scares you. There's a lot of different ways to trade these divergences. Trading the options, calls, puts based off of the divergence, or the futures, or just a regular ETF. So you could do any way you want to do it. Both on the ES and the NASDAQ, we really concentrate on a lot. Now, with all that going into next week, we'll probably be focused a little bit more on that until we see the market stabilized. Don't want to make any, big calls of buying into this flush until we see, a pure good, momentum change here, and we want to be on the right side of the market. There is some sales going on. We'll probably discuss those a little bit more in the thing, but like I said, I'm going to go over a few more stops. I'm working on the Verifone chart right now. Let's see here. We're going to come back to that. Let's just take a look at the charts. I need to get these things going. Not going to be a big list today on the stocks. We're going to concentrate more on the futures for next week. The couple stocks I had on the future watch was Carnival Cruise Line, which had a sell side divergence. We mentioned that midweek, and I said, watch this divergence, a really good sell side divergence. And as you could see, it worked perfectly as a sell side divergence. Still could move down lower. I mean, the move is down out of that already. I mean, that was a midweek update. General Mills working on a 5 to 7 day pullback. Google, like I said, I felt like a degenerate gambler getting into this one the other day on the options. I like it down here off the 200, but again, got to be careful on being in the right side of the market. IP, again, looking at a lower trend line, possible bounce. We're not there yet, but we're getting down towards that level. Probably in that 48 level would be something might be interested in. International paper packaging and containers. What else do we have? Altria, MO. Same thing. That could end up being on this watch list too, but there's a bigger trend line out here that goes down, causing this huge pattern. If we could actually get down there, and kind of see it better on that weekly. If we could actually get down a little bit further on this, that would be around that 57 to 56 area. It's right on the 200 period moving average. That would also be a trigger area that I would be watching closely. So I'm going to probably make a chart on that. Give us an update on that. So the PAY, Under Armour, the IP is interesting.
Low tick alert.
All right, well, the day has ended, and just to take a look, another bloodbath in the markets as we sold off hard, but right down to the 200 period moving average. That was a big level. We did break under that 2600 level, but we closed right on the 200. It's going to be an interesting week next week. We could actually see some news over the weekend that actually gaps us down. So the issue is here, or what's setting up? Is it a good short, or is it too late to short? We did have some shorts this week. Not currently short right now. And going into next week, what I want to do is I want to show you the setups, but I don't want to place the buy triggers yet because of we could actually flush right through them, and you don't want to have these false alerts. So we have to actually get we have to have some kind of stability come back into the market. So either Monday or Tuesday I'll do an extended late night show, and we'll put together, we'll activate it, depend on how the markets are. But these are the setups that I'm looking to put on the HPS watch list. We went over a few of them. Actually, I do like this Under Armour a lot. Even though we did, it's just chopping around here. I do like it a lot. We talked about that one. The Joe, again, waiting for a closing price. Well, actually, that one probably did close now underneath a little pressure, but I still like this one. The pattern's still nice. The other ones we went over. The Altria, gonna be setting up that chart on Altria on Monday. I think this will be a fantastic trade. The question is, do we get down to this lower trend line, or do we go out a little bit further and we get down to this bigger 1, 2, 3 channel, right under the 200 period moving average, which would be around 57 area, 57. So we're going to set that chart up for that level, but we don't want to flush through it. If the market does have some bad news, we could actually flush through, and we don't want that to happen on any of the alerts. The all right, the Verifone PAY started putting in a reversal, and then the market here sold off hard. So as we were setting up that chart, again, we're probably going to wait on that until Monday if we can actually see that low hold up. Never even got that chart. I was going to bring up that chart, but as we saw the market here sell off aggressively at the close. International paper, the other one, IP. Same thing, breaking down. There's an underlying trend line underneath us with the 200 period moving average. And then earlier in that video, we talked about the relative strength stocks, the bullish flag setups. Those are the ones that'll probably bounce first. So we had those, and let me do a fast scan on those again, and then we'll leave it at that. Individual, let me get that. And they kind of disappeared. A lot of them disappeared. Yeah, nothing showing up on the EL. What was that? SD Lauder. Actually, look at the strength on that one. God, what the heck is going on there, SD Lauder? Had a divergence back here. Something was going on, but since then it's been, wow, what a rip. All right, well, let's recap here a little and just understand that the market's in a precarious position. And going into Monday, I decided that we're not going to add any new stocks to the watch list other than what we discussed today as potential ones. And I'm going to wait until Monday to get through Monday and do a special show, a late night members only show on Tuesday evening, where I will then come back and kind of reevaluate, because I have a feeling that Monday we could actually get we could actually have a lot of news breaking over the weekend. Just like the situation that happened in Facebook when we talked about Facebook continuing to get some downside after the initial news. Here's the Facebook chart, and there was a nice head and shoulders formation. And yeah, we got the nice move and we took it off, but we also did get that follow through. Facebook down at the lower channel line right now, and we'll see if there's any more news out there. Typically, we like that big 1, 2, 3 channel for a bounce area. This is a nice area, 159, but there's definitely, I'm not going to make a call on that and say, hey, you should get in there. We need to actually see a little sign of strength. We need to see if there's any kind of macro news that's overhanging this market that could actually push us down and further. They're announcing that we're in in correction territory on the Dow, meaning we're down 10%, I guess, on the year, or since off the highs. That's what we should say, off the highs. So I want to, revisit the watch list. This is something I don't, I want to be prepared for next week, and we're preparing a different way. We're going to watch the Sunday night open. Monday, we're going to let the Monday market open up, and we're going to trade the snot out of that. Using divergences and stuff, And then on Tuesday, we're going to continue to watch that and see if there's any signs. Now, by Tuesday, we should start to see some good signs of something happening. Either, a total, free fall in the market, or the signs of bottom. We'll have a better picture, because right now there's way too much news overhanging us that could break over the weekend. And I'm looking forward to that. I just cleared my schedule for Tuesday night because I want to do that. Do we end up getting down to this lower channel line? There's a possibility. I mean, that would break us down through February lows everyone's so concerned with. 25.29 doesn't seem that far away. I mean, the Dow, the S&P down 55 points today, and we're trading another 55 points would bring us right down to those lows, easy through those lows, and we know where that would bring us. So there's a good shot that we actually get down there, and once we get down there, then we can reevaluate and actually start to pick up some winners, pick up some really strong stocks. And even at the beginning of this watch list, when I went over the strong flag type of stocks, those are the really good ones. Those are the interesting ones. Red Hat, RHT, just to let you know, earnings are going to be coming out on that next week. So there's going to be, maybe some of these weaker, actually strong stocks are going to be put to the test next week. I believe that is Monday or Tuesday. Again, I'll get back to you on that on Monday. Let me check it right now. All right, let's take a fast look here. Monday, after the close, Red Hat looking at 81 cents. Tuesday, we have McCormick Spices. That's before the market opens. Always a good one. MKC. And then after the close, Lululemon. Believe it or not, that's a great looking chart. Restoration Hardware. I really rarely trade that one, but the Lululemon here is usually an active one. I don't see myself getting into any of those gambles into the earnings. The BlackBerry actually coming out on Wednesday, and the Walgreens Boots Alliance on Wednesday morning. After the close on Wednesday, we have GameStop. And then on Thursday, anything here big here? Constellation Brands. It's STZ here. Constellation Brands, beer and wine. That's an interesting one. Also, but no big market movers. And again, we're not really officially in earnings season. We got some stragglers here, and that's what's lined up for next week. So we want to pay attention to that. But that's all going to be about the news coming over the weekend and how we start off on Monday. And I look forward, taking a different approach early in the week with our scalping, which have been fine. The stocks, they're being dragged down with the market. We have some quality names, but everything got kind of brushed down here today. The one last thing I'll mention, the Veru. I want to take a look at the Veru. This is a spec stock. VERU. I know a lot of people are in it. Did pull back this week. We had a nice run. Big pop. It had some good news, and it sold off into it, and it was disappointing. I hate seeing that. We'd love to get. I thought we were home free above $2, but you can see volume did drop down. It was not much volume today, and we just continued to kind of feel some weakness. And what happened here at $2? Once we got through $2, we had a nice big buyer that jumped about 35,000 share block that kind of got everyone excited, got us through $2. It ran up, and then the next day we kind of drifted. Nothing happened, and then we had a conference, and nothing really came out of the conference. There was actually some good news that chopped around, but just interest left. So nothing detrimental to the chart. It just would love to have seen this continue to show the strength, even against the market pounding. But we're going to watch this, and I like this. Well, I still hold this. I didn't make any adjustments to it or anything. I thought about picking up a little bit more today. I didn't. I said I'll wait until Monday. Again, on a lot of different things. The level of support here, 162. We've been in this for a while. My cost average is at 151, so still up on it. but definitely not happy with the pullback, because a cheap stock like that could really, put a dent, if you have a lot of shares, put a dent into your P&L every day. So, and I do have a lot of shares of that. So we're going to watch that, but nothing's changed on it. The news is still good. It's just that it's being a little bit manipulated. There's some sellers and not a lot of buyers. I'm curious to see if there's any insiders that came in today. There was some bigger blocks that traded, but that's about it on that. All right, so we're gonna close this down. I'm going to still do some more research here. If I see anything, I'm probably going to do one more video because we're announcing the closing of our open house. So if you're out there in the open house one last week, on the open house, I'm going to send out another video discussing your options. Stay here at Day Trading Radio, and from that point on, we'll see you we'll see you Sunday night. Like I said, I think Sunday is going to be an important day to watch the markets. Sunday evening, futures open up at 6 o'clock, and then overnight trading will happen. We have a lot of people in the room probably for that, and then Monday we'll start fresh here. And we'll pick up where we left off today. Great job again to Paul, who hosted the show today. He's been trading futures trading the futures. He's been doing really good. So hopefully that kept you in the profit zone. All right. And again, we'll pick up on the watch list early next week. Again, Tuesday is going to be the one where we're going to do an update on this, and we're going to officially put the stocks in there. We want to get through Monday, see how the market reacts Monday, and then really pick our spots on Tuesday. All right. Have a great weekend, everyone, and I'll see you Sunday evening.